Hello fellow option traders, this is Jeff and welcome to this special segment on a calendar based on earnings announcements. We can call it, since this is July 4th, we could call it a firecracker of a trade, I guess you might say. Okay, so Bank of England said some things today, since it's not a holiday there. As a matter of fact, it's probably an anti-holiday there. Said some things today that are having the futures point up significantly. Of course, there's no trading going on any U.S. exchange today, but there are U.S. stocks listed on other exchanges, which gives the futures here a boost. And so there is quite a bullish sentiment out there at this time. But that's not what we're here for. What we're here for is to remember the other day I mentioned that I was wanting to look at some calendars over the sort of quasi-long weekend, even though there's going to be a trading day this Friday. But I wanted to look to see what would be a good calendar to put on, and I think I found a really slick one. So when I look at my account, remember, I don't want to do any more than 20,000 at risk. So I'm looking here at 19,500. So 20,000 is sort of a ballpark figure. You know, I don't want to grossly exceed it, and I don't want to underinvest either. So I want to make sure that I'm right around that $20,000 mark. So we have a couple dollars that we could mess around with here, I guess you might say. So as I was looking around, I looked at stocks on the A+ list, and I poked around at a couple of them, but the best one that I came up with, believe it or not, is Netflix. And let me give you a little bit of a reason why here. Let me go back to all accounts. And then I'll close this window so we can have a nice big chunk of real estate here to take a look at. Alright, so I'll look at a chart on Netflix, and this is a intraday 15-minute chart here, and this is a daily chart. I'm not really looking at stochastic or anything, but what I am looking at here is the MACD, and it's pretty dang flat. It's just not doing anything. There's no negative momentum and there's no positive momentum. There just is no momentum at all. The other thing that we need to look out for here is the earnings, which is on 7/23, which will be 7/23 is the Tuesday after this expiration on the 19th here. So we have to be careful about that. But what's good about that, and there are good things about that, has to do with volatility. So if we take a look here, let's close up these months. If we take a look at volatility, volatility of course is highest on this July 4th here. It's 81%. And they are expecting between now and then a move of between $36 plus or minus is what this number means over here. Sort of a market maker move put in for each month based on volatility. So, you know, the longer you go out, the more price is going to move. So that's really not a sign of volatility, but this is, if you look at the difference between the regular July expiration and the July 4th expiration, there's a huge difference there. So we're interested we want to sell volatility, and we want to sell high volatility, and we want to buy low volatility. And you know, if I say this word too often, I'm going to mess it up. So if we say that, say we want to do a calendar that has this level of volatility, and let's shrink this down because we're going to be playing around at the money. So we're going to shrink this down to, say, like 4. All right. So if we were to, let's say that we want to do this July, and we're going to take a look at theta. So let's say we want to do the July 225. Alright, so if we want to sell the July 225, we will collect basically or lock in 39 cents of volatility each day, starting with, I guess, today. I'm sure that that's where that number comes from. And if we wanted to buy August, at 225, we would be seeing a volatility of, a theta of 23. So the difference between these two is what we're looking for, because we want this one up here, the one that we sold, to decay faster than the one that we buy. So that's just kind of a short lesson in calendars and how they work. Alright, so, and it's a very short lesson. I've done other videos and posts and stuff like that on calendars. I'm no expert on them. I'm just giving you from a simple trader's point of view why this is looking real attractive. Okay, so we currently have a bear call on right now with an August expiration. Okay, so now what do we want to do? Well, let me close these up again, bring this up here, and I'll show you what I came up with. Alright, so here is a double calendar. Alright, so we're looking at this, actually we're looking at a July, fourth Friday in July expiration. We're looking to sell that, and we're looking to buy September 13th. So let's go back and take a look at those. I'll drag this down here. We're looking at July 4, say at, was that 225, right? 225 and 195. So we'll look at the 225. Alright, so we have a theta of 39, and September at 225, we have a theta of 15. So the difference between these two is pretty hefty. It's almost 50% less for the September. So you can say, rounded off, it's going to decay 50% slower than the July 4, the fourth Friday in July expiration option that we would sell on this calendar. So we'd sell this one and buy this one. And then when this one expires or close to expiration, we would just close the whole thing. We would buy this one back for a couple pennies, and this one we would buy back. It will be less, it'll be worth less than what we bought it for, but it's not going to decay as fast as the July. And you can see that when you take a look at a risk graph. Okay, so here's our risk profile. I put on a double here. This is a double calendar at 225 and 195. I locked in the prices here. I'm pretty sure I'm going to do this trade on Friday unless things change significantly. And if they do, all I'm going to do is slide the price around. So we know that as earnings approaches, that volatility is going to increase on our short options. And that pumps up this price a little bit. Not much, but somewhat. And it's going to increase a little bit on the September, but not as much. So you can see here that the July is 85% IV, and on the September it's 60. So this may move around a little bit, but actually, to tell you the truth, I don't think it's going to move around very much unless Netflix has some sort of price crash. Alright, so without doing anything to volatility and knowing that their earnings are on the 23rd, is that when they were? No, wait. Let's go back to the chart here. Earnings are on, come on, dang. Alright, earnings are on the 23rd. So that if we do that July, that particular date in July, that is after earnings. So we'll have to get out of it before that. So without doing anything at all, if we go to the 22nd, the day before the earnings announcement, here's our current price projected, calculated. It's not going to be there, but the white line would be the calculated price. And no matter practically how you look at it, we are looking at a pretty profitable trade, no matter where price may fall along this white line. I have done calendars as earning plays in the past, but I've made some mistakes, and I hopefully have learned from my mistakes. And the first thing is, don't stay in them after earnings, because IV is going to collapse and you're going to end up losing money. So do not do that. So make sure you get out before earnings, before the IV collapse, because, and I can show you here right quick, here's what happens when IV collapses. Alright, so let's say we go minus 10. Just, do I have a minus sign in there? I don't have a minus sign. Minus 10. And look what happens. All of a sudden your trade, it sort of dies. The red line comes way down. So let's reset it. We're looking up here at $1,200, and we'll reset that parameter. And up here we're looking at 1,800. So you lose quite a bit of money with an IV collapse, and we don't want you to do that. However, and you can take a chance on this July 4th is going to be worth practically nothing after earnings. But you're going to lose some on your September as well. But depending on whether the price stays within this tent, and if you look at a chart, you can see that I don't know of any tent that's going to cover this kind of a move. And you could have a nothing move, or you could have a big move up or a big move down on this earnings date. So we don't know. So we're just going to get out before. We're going to take our money and run, and we're going to be happy. Alright, so this is going to cost, like about $11 or so. So it's going to be $1,000, so I'm going to go a little bit over my $20,000 limit, but I'm willing to go over a little bit. I could not do one of these, like maybe not do the 195, but I really like this window here, this particular tent formation from a price perspective. And I have the probability date here as 7/27, so the shaded part here, which is out here and here, so that's the probability. That's one standard deviation, which is kind of typical that it would wobble around in this range. So we're talking 186 to 255. Well, has it done that lately? Here, let me go back to this chart. And let's get rid of this chart. Let's just take a look at 180. And that's down here to 255. Is that what it was? Wow, yeah. That's a standard deviation. It's probably going to fall somewhere in between there, so there's a darn good possibility that between Friday and this red line, basically, or maybe even the Monday after, that this is going to be a pretty successful trade. Okay, so that's it. That is the, I don't know, the one earnings play that I plan on doing, and I may look around for more depending on if I can free up some more cash. I'm not going to just blow my whole wad just doing earnings plays. So stay tuned. Watch the daily scans each day, each market day, and keep an eye out, and let's see how this trade develops. All right. Thanks for watching. Happy 4th of July. Have a great day and a great weekend. And, well, happy trading again. See ya.